Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we talk this week in the market, the crypto shit show, and looking ahead.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello? 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us. Pennies.
Going in Raw.
Featuring Dan, Deity of Dips, and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, November the 13th. And I mean, wow, we are about at 400 again. What a crazy volatile week. I mean, you see all this volatility. I think we should just start off with, how was your trading week? How'd you handle it? I mean, you're seeing numbers, haven't seen in quite a while. So, let's hear it.
Yeah, no, this week was crazy. In the beginning, it was a really good week. I felt like I was trading strong. Monday, Tuesday, had some really good trades. Honestly, made half my monthly goal. It was going great. And then I really just got kind of chopped up. My levels were a little bit further than the standard deviation. They were going about, I want to say, let's see, 0.3. They were about 30 cents away from the levels, where typically, or even Friday was 40 cents, where typically the standard deviation is about 20 cents. So, that's a little bit more than what I like. And typically I try and hold everything, until close to the level. But, it was just a really choppy week. And of course, we started the week, we were at 370. Where were we at? We were at 377. We ran all the way up to 384. And then we dumped down to 374. So we were actually right on the week. And then from there, we literally went up $24. What is that? It's like 7% in 2 days. Just insane. So, wow. I don't know. It was just really choppy for me. But that being said, if we reject here and get underneath 394 on Monday, I think that we can make a quick move back to 390. And then from there, I think that we probably chop a lot. Because again, when market makers make this big of a move, they now need to recollect liquidity. How do they recollect liquidity? Well, they chop everybody to pieces, and that's how they collect liquidity. It's like Pac-Man. So I'll be interested to see exactly what happens. But that's kind of my game plan going forward. I don't really want to buy here until it pulls back. That's just my plan. But I really would need to see some kind of pullback before I consider buying.
Moving on from there, do you want to start on this crypto shit show we're seeing? We're seeing a Bitcoin approach like 15K at prices we haven't seen since around 2020. So kind of getting into that would be really interesting. Last thing we wanted to talk about is if this is the bear market rally or is the bottom in. I know you tweeted something on Friday. Did you kind of want to go into that?
Yeah, no, crypto is a real shit show right now. And I actually had a few dollars inside USDC or whatever that coin is. And so I moved that out instantly. I thought that was safe, but I moved it out instantly. But yeah, so first we'll give like a little sum on what exactly is happening. So first, I guess this was back in December. So everybody knows Freed, right? Or does everybody not know who SBF is? Effectively, SBF is this. Well, was this? Well, first off, his name is Sam Bankman-Fried. Okay, and he's 30 years old, and I mean he was like the whiz kid. He went to MIT. He started a crypto hedge fund, and then he started all these different ventures. He had said that he was going to give away his net worth, like when he dies, that like he didn't spend anything. He lived in the Bahamas with 10 people. He drove a Honda Civic, etc. You know where I'm going with this. Like he was like the golden boy. And well, he was worth, I think at one point he was worth as many billions as his age. So he was worth like 25 billion, or it was close. And I mean, wow, what a collapse. So right now, Bloomberg, I just looked, the Bloomberg terminal has his net worth at around $1 to $3. I mean, he was like the guy. Him and CZ, who, if you don't know who CZ is, he is the founder of Binance. And his name, all right, I'm going to try and say this, but Changpeng Zhao, maybe. And he's the co-founder and CEO of Binance. He's huge on Twitter, most social media platforms, and he's 44. And so, Freed and him were kind of like the big guys, like they had like similar net worths. Like I think CZ's is worth like 20 billion, Freed's was worth like 16 or 25 at the peak. And so effectively how this all started was because of CZ and Freed. But let me go back to this first. In December, SBF had basically, I don't want to say forced, but I had read the memo in the email, and he sold equity to his employees at, quote, a 50% discount. So let that sink in real quick. He sold equity at a 50% discount to his employees. Like, and some people were investing like $500,000, like literally like everything that they had. Like, how nuts is this? So, oh God. So he basically stole from, well, okay, I guess at this point we don't know that, but he's selling equity at 50% discount to his employees. Then how all this started was because they faced a liquidity crunch. And the reason that FTX faced a liquidity crunch was because of CZ. Okay? CZ came out and said that they were going to liquidate their position, a $2 billion position, which on that kind of liquidity is not, it would have tanked the token. So this kind of started a run on FTX, and that's how everybody figured out that they didn't have the liquidity that they could, which is just insane. So CZ kind of came in here and he kind of forced a liquidity run on FTX, and then so it was rumored that CZ had known about the situation, and that he had done this on purpose so that he could acquire his competitor for the cheap. And that's exactly kind of what happened, or what we thought was happening. Very quickly after all these reports, it came out that CZ was going to, provide liquidity for FTX inside the short term, and they were going to acquire them. Then CZ basically came out and said, yeah, no, we're not acquiring them. This is a shit show. Effectively, that's what he said. As you can imagine, that just started the spiral. And then FTX was forced to halt withdrawals because, again, they didn't have the liquidity. Again, just to give like the summary, CZ tweets, SBF denied everything. The market crashed on that token. Okay. Then CZ offered to buy FTX. Then again, sees the balance sheet, does due diligence, decides not to buy. Then they're trying to work on a solution. And then, I mean, this is like all Monday, Tuesday. And then FTX and Alameda, I think is how you say it. That's the hedge fund, the crypto hedge fund that Freed started. Okay, so think about that one. They filed for Chapter 11. Okay, and then new overnight. So today when we're recording this, it's Saturday. New overnight, FTX was hacked. Now this is the shit. Okay, and I'm not sure how I feel on this because I really just don't know how to feel. But apparently they were hacked. FTX was hacked, and $1 billion of customer funds have vanished, and basically their balances are showing zero. Like a direct quote is, "Oh wow, oh," and I'm just okay. Wait, so my notes say the exchange's founder Sam Bankman-Fried secretly transferred $10 billion of customer funds from FTX to Bankman-Fried's trading company. Oh, okay, yeah. So that was the original complaint, and then now overnight. So since November 11th. So it's November 12th, and we're releasing this on November 13th. $1 billion of customer funds have vanished. That's crazy. Some people are claiming that it's Russia, but this is just crazy. Other people are speculating that FTX is going to take it and he's going on the run. And I mean, it's just every few hours, it's just insane. And to kind of put this in perspective, everybody knows about Enron, or if you don't know about Enron was the biggest BS ever, and Enron was about 23 billion. This one could be. I'm not saying it is. It'll take so long for the fallout of this to be truly calculated, but the potential fallout is 55 billion, which is double Enron. This could be. Again, I'm not saying, but this could be the largest fraud in history. Which, that's going to hurt a lot of people, especially during this time. With high inflation. I can't. It just sucks. It really sounds like this Sam Friedman guy was really running a Ponzi scheme. It sucks. Because like I got people DMing me who, had like their entire, life savings in it, stuff like that. And even still, even if this didn't happen, I mean, it already stunk that, crypto was already down like what, 70% most tokens. So this is a real shame. And even the stable tokens that trade at 1, like par value, they're now trading at below 94. Or below 95, they're trading at 94. So it's just a real shame. And then, just to go over, kind of what a Ponzi scheme is, I'm just going to go over like 5 characteristics, and, you guys can decide for yourself if you think that this was a Ponzi scheme. Number 1, the company offers unreasonably high returns. Yeah, that I think that's why most people got into crypto. Number 2, the company does not provide detailed legal information about itself. Well, see, here's the thing is that FTX was kind of in bed with Gary Gensler, who's the SEC chairman. And there's reports, well, they had multiple closed door meetings. And it was reported that they were trying to find loopholes, around, regulation, because there really wasn't many regulation. Oh, and on top of that, not only did Gary Gensler and Fried have closed door meetings, but there are senators calling for Gary to resign. Like Gary Gensler resign is a not top trending, but for me, top trending tweet right now, which is just crazy. Yeah, here we go. U.S. Congressman Tom Emmer says, quote, SEC Chair Gary Gensler was helping FTX work on legal loopholes to obtain a regulatory monopoly. That's crazy. Oh my God, it just sucks. This whole thing sucks. But anyway, So that's number two. Number three, the Ponzi scheme implies constant contact of fraudsters while its victims, such as calls, messages, etc. Yeah, so basically no one knew about this except the people from the top. And they were supposed to be like the quote unquote trusted people. You know, he was the golden child. Number four, the scheme can only exist as long as the number of investors grow. So yeah, inside his tweet, I think SBF at one point said, I can't believe that things unfolded this way. And it's like, brother, like, what do you mean? Like, this was a house of cards. Like, this was eventually going to collapse. You know, it was just a when, not an if. Yeah. I mean, and that's the thing, you know, he took client money and he invested it inside incredibly risky investments. So, you know, he was like, oh, we're not investing in client funds. We're not investing in client funds. And what was he doing? Investing in client funds. Not only investing in client funds, he was investing inside the most speculative nonsense ever. So it's just crazy. And then, you know, obviously those investments went to crap. And hence, when he needed to provide liquidity, he could not. You know, that's the whole basis around it all. And then number five, when the inflow of investors dries up, the company closes and investors are left without funds. So, you know, similarly, you know, as we just talked about, you know, he couldn't provide liquidity because this Ponzi scheme was huge. Like this is, again, this could be the largest scale Ponzi scheme ever, or really even just the largest fraud case ever. And I mean, you know, hopefully investors are not left with nothing. But again, when you invest client money inside speculative investments and then those investments go horribly wrong, there's really not much left, especially since this guy had, you know, it's not like, again, you know, it's not like he had 16 billion in liquidity. Nope. He did not have any money liquid. You know, that's kind of the shape up of the crypto space. I mean, I feel like it just consumed our lives this week, but you know, with good reason. This is crazy. I really can't believe that that all this happened. You know, it's really just nuts.
Last thing we wanted to talk about is if this is the bear market rally or is the bottom in. I know you tweeted something on Friday. Did you kind of want to go into that?
So the S&P 500 had a total of 5 bear market rallies before bottoming. The average rally went up 17.9% and took 4 weeks to complete. All right, so let me just say that again. In 2008, 2009, SPY had a total of 5 bear market rallies before bottoming. The average rally went up 17.9% and took 4 weeks to complete. All right. So 17.9% in 4 weeks was the average bear market rally. On October 13th, SPY briefly hit 348.11. The last 21 trading days, which are 29 calendar days, the market is up 14.6%. So effectively, by the time that Monday closes, if we are up another 3%, which would be crazy, but you know, possible, then we will be inside what the average bear market rally for the last bear market. Now, does that mean anything? No. But I will say this, that you know, the action that we're seeing on the S&P 500, well, across the market, is not bottoming action to me. And what I mean by that is that for me to see bottom, we need capitulation. And for us to get to capitulation point, I think that we probably need a halt down day or some really crazy day. And again, it needs to be on big volume. That's the whole point of capitulation. You know, you need a huge wave of volume to come in and on a really big flush. And I don't know what exactly that could cause, but I'll say that the one thing that I'm a little hesitant about is the fact that now there's a 0% chance of a 75 basis points rate hike by the Fed. And I'll say this, I don't agree with that because inflation is still at 7%. So if anything, I believe that what we just witnessed with lower inflation is just purely a strategy confirmation move by the Fed. They're going to pat themselves on the back and say, this is working. And so why would they switch up now? Again, there's still a long way to go, so when I think about scenarios that could be that, could give us a halt down day, it's the fact that we're at a quote unquote 0% chance for 75 basis points. That's what I'm looking at. Now, the other thing that I want to point out is, and this is from Wesley J. Maddox. He's a CFA and a CMT, and he's on Twitter. And so he tweeted out something the other day when the market was up 5%, and he said, days like today don't happen in bull markets, and it is by no means a signal to pile into stocks. In 2000 to 2002, the NASDAQ had 14 up days of 6% or more, and you would have been wrong 14 times if you thought the bottom was in. Whoa, that's crazy. So 2000 to 2002, the NASDAQ had 14 days of 6% or more, and you would have been wrong 14%. You would have been wrong for 100% of the time if you thought the bottom was in. I'd like to see the numbers on 2008. I really would like to see the numbers because it's probably something similar like 13 out of 14, but still, I'd like to see the numbers. But that is crazy, and that's wild. That's wild. I mean, we had a few we've had some bear market rallies, but again, is that I think that because we're holding this lower level, I think because we're holding this lower level, people are getting bullish again. But I don't know. I don't know what to think. It could be. I don't know because again, that is just older data, but it doesn't mean that it can't. It's older data, and even though it's a high probability, doesn't mean that it can't do that, or that that it's not wrong. Like we could be on the 14th out of the 15th time. But I will say that I have another tweet, really, really on the tweets today, from Northman Trader, and his name is Sveven. Oh, I'm definitely messing this up. Sveven Henrik, I think. He's a big macro guy. I follow him on Twitter, and he tweeted out something that's interesting. I'll just read it first. It says, preface, I have no idea what will happen or when, but we've been patiently watching the structural VIX chart for over 2 years. I suppose it has risked lower. Nothing is confirmed, and hopefully it never plays. But if this does play into next year, then hell is truly coming. So I know that you guys can't see it, but we'll attach it to the tweet that we send out the podcast on. It is a chart of the VIX, and I'll tell you what, this is kind of scary. So it's basically it's a VIX chart going back to 2007. Okay. And effectively, it is a massive, massive, massive underbelly. Basically coming back from, basically going all the way back to 2008 or 2007. Like you guys can't see it, but think about a huge, like if you guys know like Elliott wave theory, think about like bunch of U's on the chart, and so every time that the U breaks out, it goes a little bit higher. But so there was a U breakout in 2011, and so VIX went to 48. Okay, and then there was this like U breakout, inside COVID, and again like 38, and then again one more time early this year, and it went to 38. Now that's not like a big deal. Like VIX going to 38, whatever. But the bigger deal is the fact that there are a bunch of different U's making up this larger U from 2008, basically signaling that if the U were to complete, which every other U has, that we would go closer to 85. And currently the VIX isn't moving on anything. So for us to go to 85 would be freaking, like, we would need something catastrophic. And I think that's why Henrik used the last line. If this does play into next year, then hell is truly coming. Because, this would signal at a very large, this would signal at the VIX moving 300% up very quickly. And then the last thing that I want to point out is that if you overlay 2008 to 2002 VIX, 2008 VIX really didn't move over 35 until December of that year. And it crossed 35 and it went all the way up to 80. So I don't know. It's definitely something similar. I mean, it's definitely, it looks similar, but, we never know. But again, is that, just be safe out there. I think that there's a lot of things going on, and there's a lot of risk out there. So peace, homies. And, my bias is that if we do gap up on Monday, I probably will be looking to short.
All right, guys. Well, thank you so much for tuning into another episode. We love you. We'll see you all on Wednesday. Best of luck trading. Peace.
Peace. See you all on Wednesday.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.